Okay, we are with Daniel Foch. It's myself and Nicholas Alexander Karadza with Daniel Foch. Daniel, we're not close by, so we totally appreciate it when you come here.
Yeah, no, it's nice. I like long drives, so.
Do you? You can listen
especially in the GTA. It's like,
I know, it's brilliant, right?
Everything's a long
rainy
drive.
and foggy out.
Who doesn't like sitting in bumper to bumper traffic? Can you guys hear me okay, or is it too loud?
That's perfect.
No? Okay. So we were just talking, we'll just jump into this because I want to get back to your rib and the lacrosse ball in a second, but Vaughan, can you just tell everyone what happened in Vaughan?
Yeah, Vaughan just reduced their development charges by, if I read the article correctly, like 88 to 92%. So that's substantial.
And
like cost savings.
Yeah, that's huge.
$40,000 to $70,000 on a unit.
Now you got to see if those things get passed on.
Well, so this is interesting, right? And actually, did you guys have Matt Young on yet?
No.
So he's doing the rounds with all the podcasts, but
remember, we live in a bubble.
Yeah.
We don't really know people.
Yeah. Well, he's on Twitter. You guys are on there. I've seen.
Yeah. I am. Sometimes I like to shit post on there.
Yeah. So he's a Toronto developer, and he started this coalition of developers who have basically said they've written this open letter to all these municipal governments and said we will reduce dollar for dollar our sale prices by whatever you reduce DCs by. And it's a lot of big developers who have signed this thing. So, I mean, if you think about it, the cost benefit is like that it's not money that they never would have saw. So they don't, obviously they'll just reduce it because it means that the units get sold.
Yeah, nothing changes for that. Exactly. Yeah.
Like everyone's like, oh, they're not going to do it. It's like, yeah, they fucking will.
Well, their margins,
the math is there.
So why do you think then Vaughan's doing it? Like magically now they don't need these development charges? Like why did we get there with development charges if we can just reduce them by 80 or 88%?
Yeah. So this is the interesting part. I put out a tweet 2 days ago. I'm going to credit that with why they did it. But it was like, when are they going to realize that 50% of something is better than 100% of nothing? Like they're welcome to collect $90,000 in development charges on 0 units because nobody can afford to build because the development charges are in the way. Or they can collect $10K per unit on hundreds of thousands of units that will get built because now all of a sudden it's economical to build them. And they'll also get the future tax base from all of those units. So do you want that revenue or do you want no revenue?
But yeah, so the logic makes sense. But if you're looking at call Vaughan, what are we going to call a home in Vaughan? You know, this a regularly priced home,
1.5
million. Okay, 1.5. I was going to give it even $1 million for something smaller, right? But 1.5. So the $50,000 and 1.5. How many units is that really making like how much of a change is that really going to make to the people that are able to qualify for these units or that are willing to purchase these units?
Well,
like it matters, but $50,000 is $50,000. But I mean, is it going to really change the numbers any?
I think so, yeah. So in a couple of different ways. So for end users, it'll marginally change it. We have to imagine also that the majority of supply is high rise. So it's not your $1.5 million house. It's a
600,000,
probably 600K condo. So there's that. That's material, right? Like that's it's a 10% difference. Which
is it $50,000 in the condos too? Is that the number?
Yeah, something like that.
Yeah,
60K. So there's that piece, and the other piece is the investor, right? So there's still investor demand for units that are priced well. Like CentreCore proved that by selling out their project at Pickering Town Center, right? And there's a lot of projects that are successful if they're priced well. There's not a lot of demand for projects that aren't priced well, but investors are still there. So now all of a sudden, all of the developers in Vaughan who want to launch units can launch them at very compelling prices. And realistically, your 905 rents are pretty much the same. Like you're $390, $410 a foot, all over the 905. Now Vaughan just basically created the best ROI condo unit. So all of the investor demand and all of the developer demand is going to go there because developers aren't going to launch projects if they don't have investors lining up to buy them. And now they have a higher likelihood of getting investors to line up to buy them.
Yeah, I didn't think about that. But
all the developers happen to be based out of Vaughan. Yeah. Not all of them, but let's face it, there's a bunch of developers out of Vaughan.
Well, there's a big court case about some stuff.
Oh, really?
Yeah, but the Bondfield and the hospital, that was the front page today. One of the hospitals. It was from years ago. But
so, do you think this is a trend that other municipalities will catch? Sure. You think so?
Mm-hmm. Well, now they have egg on the face kind of if they don't, right?
So now it's just game theory. Oh, okay, the money gets pulled over there. We need money coming into our municipality.
Well, you're going to see projects launch in Vaughan and they're going to sell. And now all of a sudden other municipalities are going to be like, oh shit, Vaughan made some money. They made less money per unit, but they made some money. I can sit here and make no money by selling because no developer can afford to build something in my town. Or I can reduce my DCs and get housing built.
And like you were saying earlier, then they have a growing an ongoing tax base as well, right?
And the investor demand that you were suggesting is still there. Where do you think that's coming from? That's local Canadians, money coming into Canada still?
I think it's a little bit of both. Like, I think that there's some domestic, like, I'm of the opinion that pre-construction condo demand is actually basically people who can't afford to buy good investments today because they don't have 20% down. So they're actually buying the extended deposit structure in a lot of cases. Not the majority, but like your marginal buyer would be, because why else would you?
It's a nice feature.
Why wouldn't you buy a 20% down cash flowing multiplex in Niagara, right? Like,
Agreed. That's kind of why we've stayed away from pre-construction, because we've always said, hey, we just want our money working for us now.
Yeah.
But you're right. If you can extend the deposit and break it up into chunks like that.
Yeah. And so that ends up being a lot of, so there's probably that. It's people who are long real estate and can't buy other real estate. I think you get a lot of foreign capital, and like where they actually don't really have an incentive to make money. Like their primary incentive is qualitative. It's like maybe, it could be nefarious, like, money laundering. Yeah. It could be they just don't want their government to know and they want it parked somewhere privately, right? Like,
sure, scared of capital controls, move it into a different jurisdiction.
Yeah, it is interesting. Like if you look at CRS scores, so like immigration scores, it actually jumped up when you saw it was like on a long, slow downtrend, and then it jumped up when they banned foreign ownership. So basically people were like, I just get my PR if I want to invest in Canada. Yeah.
Okay, so you think investor demand still, when you say that, do you think that applies to the whole country of Canada, I guess?
Yeah, I suppose. Yeah, like within reason.
Different products in different places, though.
Yeah, I mean, well, like you can get these like isolated geographic theses, right? Sure. Like some people are bullish on Calgary, some people are bullish on Edmonton or whatever, right? Like if you believe in, I don't know, like nickel mining, you might want to buy it in Sudbury, right?
What are you bullish on?
I'm bullish on natural resources for sure. So like I think a lot of I'm bullish on resources and natural and land, right? Like so like
with our current government, you're bullish on.
I'm assuming I'm making any investment decision assuming that we'll see a regime change next year.
Yeah, okay. Because
regime change is the right language, I think. It does feel like a regime. Yeah, yes, I like that you use that language. I really endorse that language. Regime change is required. We need Daniel. Look, I keep mentioning this all the time. We need him to go into politics. Nick, were you going to say something? You mentioned Nick was bringing up something before we started recording, just development charges and what's that going to do to the budget of a municipality. You think they're going to be okay? And then they're not. Like they weren't okay to begin with. They all just like waste money. Like it's not going to magically balance their budget, but their budget was never balanced. Okay, so how are they going to fix that? They keep issuing bonds, and I don't know, keep asking the province for money, keep running a deficit. Really, that's it. But the same way they've been doing it forever. Just slightly more extreme for a couple of years. I laugh because it's yeah. So the problem is just going to get worse. Well, the problem with the municipalities is they don't have the same tools to be able to go and access the money. So then they got to go like beggars to put their hands out, right? That's like, it's like what you're seeing in Toronto right now. Yeah. Right. Didn't Chow recently, wasn't that last week that she was like, hey, just give us the money that you promised us. I know our housing starts aren't up, but can you give us the money that was earmarked for us getting our housing starts up anyways? They're just all desperate for money. So it's interesting, like, and then you were talking about austerity, like it has to go down that path. And I mean, the logical side of my brain thinks you're right. And I agree with you wholeheartedly, except I've thought that for so long now that I'm like, well, I guess I'm just going to be wrong forever. And we're not going to go down that path. And they're just going to kick the can down the road. I don't know. Well, I think that like you are running into a problem where like you're, I don't want to say sovereignty, but like there are consequences to running like a bad, budget as a government, right? Like we didn't have that for basically since the 90s, like since the last major cyclical I think the IMF event. Stepped in the 90s. Yeah. But so like the last major cyclical event in Canada, that was like your rates were high and they've basically been trending down since then, right? The US was a little bit different because they had 2008 in the middle, but still kind of the same theme. And now you're seeing, so let's examine the political shift that we just saw in the US where so the whole thing started, like you have Javier Milei in Argentina with the chainsaw capitalism and going in and basically just gutting the government, like literally ripping post-it notes off. Yeah, like actually, but amazing, right? Like this is stuff that's like history books. You think about it, this is gonna be, and then this guy went in and started, and this department's gone, and this department's gone. Yeah, and so I think that is kind of that's becoming a cultural thing, right? Like they just had him in the White House with Elon and Donald Trump, and Trump and Elon are talking about doing the same thing in America. And America does honestly have to run a state with fiscal restraint because they have a reserve currency to protect. Like if they keep running this like Ponzi capitalist scheme that I don't like, I don't know if they want to protect it anymore, but maybe that's a different discussion.
Yeah, I don't know. Was that a lot of pressure, or you just
well,
think
just how are they going to rebuild their own economy? Trump talks a lot about bringing jobs back into the country. How are you going to protect that if you protect your dollar? How are you going to do that if you protect your dollar? So you're going to just keep a strong dollar.
Well, then you would have
the jobs back.
Well, then
I guess
like the strength would come from high yield on their like government securities, which would you would assume would be coupled with like a deflationary or disinflationary or less inflationary environment. Mm-hmm. So they would blow up everybody else by having them experience inflation, which you can see happening like in a smaller scale between Canada and the US just right now with rates, right? Like CAD's getting destroyed by the fact that we have to hike faster than the US. Everybody else is in the same setup except the US right now. Like Japan is going to blow the whole thing up. That's what's going to happen, right? Mm-hmm. Like that's the catalyst.
You said that we have to hike faster.
Sorry, cut. Yeah. Mm. So.
Yeah, I just think even if we'll see where this goes. I just don't know how they're going to do it. Just with the interest expense that they have carrying the debt load they have of whatever it is, 35, 36 trillion. I can't even keep track anymore. 36. Did they hit 37 yet? Yeah. Whatever it is. Yeah. Trillion there, a trillion here, a trillion there. If they keep rates in any meaningful situation with a debt load of 37 trillion, I think they're now at what's the term for it in economics? Fiscal dominance, where you just have such a debt load that even with the rates, if you try to keep the rates high to promote a little bit of austerity or to promote the idea that you're going to tame inflation, the higher rates are actually causing inflation.
Right.
Because the people holding all the bonds and earning all that interest on the debt roll that into the economy, which is inflationary. So I just don't know if they're painting themselves into a corner.
Yeah, they could be. I mean, like, I guess it just depends on whether or not like you feel that the demand for USD comes from the bond market, or if the demand for USD or like the strength of the USD comes from, like, you know, you see people like, oh, the USD is not backed by gold anymore, and then they put the video of like the like all the U.S. Navy ships like flying.
Yeah. Oh yeah. Got it.
But like it could be that, or it's like the U.S. dollar is backed by like freaking America's Got Talent. Like honestly, think about it. Like everybody in the world still wants to go and be on the.
And I mean, there'd be a contract between a company in the UK and Argentina written in U.S. dollars. Right. For sure. Not even outside, completely the euro dollar market, just creating U.S. dollar demand with contracts written in U.S. dollars, nothing to do with America. So. Yeah, it's definitely a complicated thing. It'll be interesting to see how it plays out. I think going back to Nick's point, I just think that at this much debt, I feel I like you either grow your economy, you default on your debt, or you inflate it away. There might be a fourth option that I'm missing right now.
Well, slash spending too, but I just don't see. I'm just jaded. Yeah. Like I'm jaded. Like it's been too long where I've looked at these numbers and like these numbers don't make sense. You should have been bankrupt a long time ago, and now they're just getting worse and worse. So to your point, you're thinking that now it's reached a point now where they have to, because things are really just going to explode if they don't. Whereas I've just too soon. I got to that point too soon that I'm like, shit, they're going to be able to kick this can down the road for longer for whatever reason.
Well, I think that like the challenge is that you. Like with the MMT experiment, like that, like what you're saying is like, I guess a lot of these people have been like going into this like Keynesian idea that governments can continue to spend money and it will stimulate the economy. But, and like MMT, not that like any of them are actually prescribing to that, but like if you were to imagine it in like, that's the final form, at a certain point, it demands that you tax all of that money back out of the economy, right? Like that's how you get it back out. In Canada, you can see this, right? So in Canada, they go, and in the US, they've thought about it, like, or they've experimented with the idea too, with Biden's increase to the capital gains inclusion rate or capital gains tax rate. Their inclusion rate's already higher than ours, which is funny when you talk about like the commie idea, but, but you know, Canada pumps the housing asset, right? Full of, and everybody gets all this asset wealth. And then all of a sudden they're like, oh yeah, we're just going to increase the capital gains rate. So whenever you sell those, now that's them opening the drain on all of the money that they've created that's circulating in the economy. So that's part of it. I think that like all of the ways that you mentioned are like some combination of those will take place, right? So one will be that they're going to keep printing. Like, I don't think they're going to stop printing, right? I don't think that the rates will come down and bond yields will come down. And so we'll likely see their interest expense become less of a burden. But I do think that we will see some austerity because people are starting to finally, and people are starting to exercise the necessary element of democracy, which is that you can hold your politicians accountable. And we're seeing it happen. Like there's a huge shift taking place that people are asking them to stop
I see what you mean. So you're like some element of austerity, so which allows things to catch up. So it's slowly, it's like any overheated market. If you look at like the money creation or the inflation, it's just, there's this overheated market. We create some sort of austerity. We keep the rates at a certain level. They keep printing money, and slowly it converges to a manageable debt to GDP ratio or whatever we want to look at over a period of time, versus like, shit, we're really screwed. So like versus really cutting all the waste, it's more like, hey, let's bring things kind of into like a balanced perspective and play this out over whatever, 3, 4, 5 years or longer. And then things kind of get into a little bit more of a stable situation. And then we continue from that point.
Well, I think like Canada's a really good case study in this, where you like, yes, everything that you said, but like in Canada, we're seeing the consequences in real time of that mismanagement, and the way that it materializes in the most vicious way is through devaluation of CAD, which eventually becomes net inflationary. And so they have, like, when you talk about the US painting themselves into a corner in the way that they have with the central bank, we've done it in the same way by not having reserve currency status. And I think that you'll, like, if you have the US government talking about whatever it is, cutting all of these different departments, there's no way that doesn't translate to some of the larger bureaucracies around the world that actually have problems to solve. Like, they don't really have to solve the problem unless somebody who holds a ton of USD like basically tries to call them on that, which just isn't going to happen.
So you think this election was literally, you mentioned Argentina first, but this election in the US was like an inflection point in economic history?
I think so, honestly. I actually think I think it'll take us a really long time to realize that, but I think that it wouldn't surprise me if this was like the point at which we realize that the MMT experiment failed, and that we can't trust people who want to just pump look at Canada as an example. Like, you mentioned the bond yields and like how that you have that fiscal dominance, but like, look at all the waste in like, you know, ArriveCan. Let's just use that as an example. That was still $50 million in that dude's pocket. Like, he still spent it somewhere. It was still in the economy.
50 million. Yeah.
Right. Yeah. So like waste, but you can see it, how it materializes, and people are just done with that. Like that, I think that people are done with it. I honestly think that.
Do you think
I fucking hope so, man. I hope you're right. I hope so.
I've never thought about it like that, because I don't think people were voting.
The fourth turning guy. Like, this is it.
Yeah.
That's what's happening.
I just don't think people were voting on that. I don't think enough people have insight into that, or thinking like you two.
Not directly, but they are indirectly, because they're voting against the consequence. They're voting against inflation. They don't really care. They just want inflation fixed. And like, what Donald Trump said about fixing inflation resonated more than what Kamala Harris said about fixing inflation.
Got it, which was nothing.
So you think we are through the most turbulent period?
No, it's going to get a lot worse.
And what does that look like to you?
Well, I think like if you go austerity, like, we're fucked. Like, actually, like, really, you got real problems.
You know what freaks me out about Daniel? He's very fucking intelligent. It's very clear. And he says things so calmly, but they have such dire consequences, the things that he's talking about. It doesn't seem like to phase him at all. He's just like, where I'm like fucking freaking out, like, holy shit, and he's just like, no, you know what? This is going to be fucking ugly.
He's probably got an armory somewhere and a fucking 3 bunkers.
He's got a Swiss passport. He's got a Swiss passport. He's
a lifetime supply of canned beans.
Drilling his own oil.
Sorry, I totally cut you off there. So it's going to get worse. It's going to get worse. Well, like, and what do you mean by that? Like, in what ways?
Well, it like, to me, it's either like things stay the same, which is, I would say most people agree that wasn't a good path. Mm-hmm. Or things change drastically. And like, when you say like Milei pulling all those things off, imagine that in the US, there's millions of jobs being lost. Like 66% of the population is directly or indirectly employed by the public sector. It's like, that's not going to be like, that's not bullish, right? Mm-hmm. Like, that's a bad thing. But the problem is, it's a necessary thing. Mm-hmm. Like, you can't have this system that's just eating its own tail.
I was talking to someone from Argentina on the weekend, and they lived here now. They've been here for 5 or 6 years. They still have family there, and they said, it's been painful. They're like, he goes, he's like, well, wait and see, because I was talking about Milei, and I'm like, oh, so like, how's it, like, what are you thinking now? Because I knew with him coming in, he was a fan of the message. He's like, it's the necessary thing. And he was like, it's pretty bad there right now with all these changes.
And what does bad mean?
There's a lot of people that are hurting because of the changes.
So lack of jobs, lack of income.
Yeah, a little bit of everything, but yes. So yes, that. Okay. But he's like, but see what he's done to inflation. So he feels like, in his opinion and his family's opinion, that there's a light at the end of the tunnel, and it's the necessary tunnel that you got to travel through to kind of get to the other side of things.
Okay. So then Daniel's thinking, then if people are,
I don't know if everyone,
how is it on crime? Any change on crime in Argentina?
I didn't ask. And I didn't also ask what position his family's in, like how much money does his family have versus people that have more or less, and where do they sit in that kind of economic ladder, and how that would impact their opinion of things going on versus people in other situations either. So it's really just a small tidbit of information.
So if everybody follows the U.S. and the U.S. really going to go down this path, and their biggest expenses
that's like a big if too. Like I think it's.
Yes, but it sounds like you're thinking they will.
It sounds like, I don't know, like why would they run a full campaign on that if they're not going to do it?
It feels the way Poilievre's talking, because that's obviously what we're talking about. Is he seems to be talking that way? If you put weight to what he's saying, right?
Yeah.
In the U.S., their biggest expenses, I think, are Social Security, Medicare, some
defense,
interest. I think past defense now, like in order. I think it's Social Security, Medicare, interest on the debt, health. There's like a health category of some sort, and then like defense. They're all there. And then there's a whole bunch of other ones like transportation, all these other like really important things.
Yeah.
But they're much smaller relative to those 4 or 5 big monster expenses.
Yeah.
When I'm looking at something like Social Security that goes completely bankrupt in the U.S. in like 2033, like done, empty. Sometimes I think of it like, how much can they do? Can they put on a big show that they went into some transportation expenses and got rid of a bunch of people and saved like $8 billion and it makes a great headline? But on the net, how much is it really? So that's where I'm torn. Well, like maybe they can put on a big show and say, here's all the stuff we're cutting. But on the bottom line, is it really that much?
Real estate investing isn't always easy, but it can be relatively simple. And that's where the Rockstar Inner Circle comes in. Look, there's a lot of real estate investing information out there these days. That's why it's so important to pick your sources wisely. And even though investing isn't always going to be the easiest process, it does not have to be super complicated. That's where tried, tested, and proven strategies like the ones that Rockstar members use come into play. Everything shared in the Inner Circle is built from firsthand on the streets experience in the current market. It's all up to date, things that people are actually implementing today. In fact, the ongoing courses are delivered live, so they're always up to date with the absolute latest real life experiences. As a Rockstar member, get ongoing access to over 20 different systems and programs covering things like which properties investors like and why, our private rental system, what opportunities the investors are scooping up in student housing currently, the legal side of investing, why or how to use corporations as an investor, a mortgage class with the absolute latest options and programs to build your portfolio as an investor, because they're different than a regular home buyer. And there's a whole ton more in all those different classes. Of course, to implement all these strategies, members get access to unlimited private one-on-one coaching with an actual human experienced investor, not an AI chatbot, not ChatGPT or anything like that. It goes beyond training, classes, and real estate. It's a community for people looking to take control of their own finances, to give themselves options and allow them to live life on their terms. With ongoing live and virtual opportunities to connect, it's built for investors by investors. You can see everything members get at rockstarinnercircle.com/member. It's rockstarinnercircle.com/member. Now back to the show.
You could, like, the thing that the U.S. has that I don't think anybody else has in the world, like Canada has it to some extent, is that everybody in the world, not everybody, but like a lot of people want to move there, right? So if they could grow their economy if they wanted to. Like, they're not trapped per se. Like, if they wanted to increase their population by 100 million people, they could probably do, like 100 million relatively qualified people, actually, they could probably do that, right? Like, Canada proved that through our immigration system.
If they made it attractive to us, we'd probably just be like, all right, let's go.
I don't even have to. Canada just has to become marginally less attractive, and I'm fucking out of here.
Yeah. Well, even then, like, I think it's sufficiently done that for a lot of people, but it's actually not that easy to like move there. Like, I've thought about it. I've researched it at length, right? It's like, it's not that simple, really, right? Like to
get legal status and be able to work there. You're right.
Mm-hmm. So,
but Tom, to your point, like with Daniel, what Daniel was saying around austerity, like if you think about it, you're right, but they can't just wipe some of these things out. But is there the potential for, because how much waste is there in those areas? So interest is a huge expense. Yes, maybe they can manage the interest rates a little bit on their debt, so that comes down a little bit. But how much waste is there in defense? How much waste is there in the healthcare side of things? And what is it, Medicaid?
Yeah, I would probably say everywhere there's 70%.
But that's what I mean. So maybe they can't wipe out certain things, but can they make those more efficient? inefficient because anything the government gets involved in, I mean, it's just bloated to hell, right? So then there is potential savings there. Now, I don't know how realistic that is to say that, because anytime someone goes and does any sort of like real austerity, there's massive pushbacks, right? The one that comes to mind for me is I remember Mike Harris. I don't know why this sticks out to me. I didn't even know how old I was when Harris was in power, but I know he ran on, hey, here's what we're going to do, and here's the cuts we're going to do, and those types of things. And then when he did them, there's these massive protests that I had never seen since then down at Queen's Park because he was doing them. I'm like, well, the guy got elected. He's only doing what he said he's going to do, and he got elected based on it. But there was a massive pushback, right?
But like, I think both Trump and Pierre, like, it appears they like to stir the pot a little bit. Like, I actually think that would be a feature, not a bug for Trump, at least. Like, he
agreed.
Like, he has made it pretty clear he doesn't like bureaucrats. He's not trying to get a second term. Like,
now
that's a good point.
With his selections now, it's like, wow, this guy might actually really be trying to do what he was saying he was going to do, because some of the nominees when you talk about stirring the pot, there's a lot of shit being stirred right now, right?
Okay, so then let's switch gears just a little bit. What are your current thoughts? I was just going to go through your Twitter feed or your X feed or whatever it is, just to see what you're commenting on. I kind of like keeping a pulse on what you're putting out there. You do a great job, by the way. Yeah, thanks. I've always said this. He does such a great job, like just an even job of sharing information, kind of with your thoughts, but not like, you're not trying to piss anyone off. You're just neutral on some of the way you I don't know if you're taken that way by the majority of people, but that's the way I see you from my seat.
He gets all that. He's got a second account that's like some random anonymous account. He gets all that out separately.
He was tweeting at me last night.
It's actually so funny because like I really try and be politically, I would actually say I'm like basically like a libertarian, which like started as like an like super left anarchist thing, and now has become like the super right thing. But like I would say politically like relatively centrist. I don't like to prescribe to most things, but I think like both like sides of have decent things to say, and I try and keep an open mind towards it. But I found that like if you say something that's like right down the middle, and it doesn't even have to be like political, but if you just say like a fact, people will project their like I'll say like something factual, and people will be like, oh yeah, like this because you're a commie, or the people on the right will be, or like that's what the people on the right are saying. The people on the left are like this because you're like a landlord. It's like, okay, whatever. So like that's the part that fascinates me about.
So it's a big social experiment for you.
Yeah.
Well, yeah, I guess like I'm just like putting it out the truth, and then just let the world decide who I am. Apparently, you know,
you do a good job at it. Anarchist. How do you define that?
Well, I wouldn't consider that like myself to be that way, but that's sort of where libertarianism started. But I just believe in like small government, and like I think that people like I would love to see a world in like you have this like almost like you maybe call it like an economocracy, right? Like that where I think the economy is much better at distributing like human values than democracy is. And like you would probably start with this experiment at like a municipal government level, but you know, when you fill out your tax bill, like you can have a constant referendum. People can vote. They already do. They vote with where they allocate their capital, right? Like they spend money on whatever's valuable to them. You could very easily do that when you pay your taxes. Say, I want this much spent on defense. I want this much spent on potholes, whatever, right? Like it'd probably go horribly wrong for a little bit. It would realistically, but eventually.
But you could do it. Yeah.
Well, eventually people would figure it out.
Yeah.
Well, like eventually people like once people knew, and they have that like civil duty to one another, like your front end gets smoked by a pothole, and then some guy pulls over and is like, you know, you can allocate your taxes to fix that next year, right? And then eventually, I think like it would take a really long time, but like you could do that. That to me, I think is like a good, and as we get into like the world of technology where you have like, you know, AI and like all of these things that are much better at like efficiently compiling data.
Yeah. You could do it in real time. Yeah.
Yeah. And I think that we should be like, the challenge is like a lot of people just don't have that sense of civil duty, but when it's their actual money, I think that like, you know, if you're giving the government $1, it's like, you should have some right to say, here's how I feel this should be spent.
Yeah, that's interesting. When I hear you say it that way, I'm like, yeah, does everyone get the same right? Like, you know, does everyone get the same right? I guess I would be framed.
That's a whole other topic.
Yeah, no, I know. But I'm just saying, like, yeah, you're right. Everyone's contributing, and you want democracy. Everybody has a say. But then in the last 20, 30 years of democracy, with just the regulation buildup and everything that's been going wrong, I'm like, do I want everyone to have the same? Well, we don't have to get into that.
No, but it's interesting, like when you just think about, because like a lot of people are like, oh, like corporations don't pay taxes, right? Like the evil corporations. It's like, well, they probably would if they didn't have to spend their money on lobbying. Like they pay taxes by paying lobbying groups. If they could literally just pay taxes and be like, hey, I want the tax money to go to this, they don't even have to lobby. You just skip it, right? You can instantly communicate. Like, so it would compel them to actually do that. right?
I can't argue with Daniel. This is why I think this guy needs to go into politics. Sorry, I'm talking like you're not here now, but I think the way you break things down is really, it's interesting because when I hear you speak, I would probably think you are more left-leaning in today's definition of politics.
Yeah, no.
But you're saying that you try to thread the needle and put it right down the middle. Well, just because I've heard you defend things that I would think are more like on the left side of the spectrum when it comes to politics, just things around housing. I think you're very fair. Like I actually appreciate that about you, the way that you are so fair and the way your analysis and the way you share information. I really respect that about you.
Yeah.
So to hear that what you just said and where you're coming from or where you're past,
I think we got to stop just labeling things left and right. We're just buying into this bullshit narrative that it's got to be left or right. You just have an opinion and whatever, and just wherever it falls for you. You know what I mean? Like it's so much, and I'm not saying you, but it's just, I'm so sick of this flipping left and right, and right this. Like, shut up. I can have a conservative view on something and a liberal view on another, and that doesn't make me liberal or conservative or anything. Just shut the hell up. I think I've just got to reach my boiling point. It's probably the U.S. election. I think I've reached the boiling point with it where I'm like, I'm just done.
Well, I don't think people put critical thought into very much, so they just like to label themselves as this or that, and that identifies them as part of a certain tribe that they want to be to. Because if you really think about it, who puts in as much critical thought into really anything? Monetary policy, interest rates, development charges, anything that goes on in their lives or in their world. No one really puts any thought into it.
Well, I think like it's actually like to me it's a social norm that's been passed down by the government, right? Like you have politicians that basically are just trying to like bifurcate the population into two groups, really, because we only have two parties in most countries, right? Like U.S. you have an actual two-party system. Canada you basically have a two-party system. And so they want to basically say, oh, you have homeowners and renters. Because then you can identify, this is who I'm making my policy for. This is how I'm going to win my election. And they'll just say, this is the vote we're going to get. This is the vote we're going to get. So that's why.
There's a psychological principle of us versus them as well, right?
100%.
So whatever you identify with, it just carries through. And they've just amplified it to a point through politics that it's at this ridiculous level.
But what I found is I would say I'm actually probably further. I'm probably further on the right than like what most people would say or most people would think. But the reality is I really always try and see what the other side is saying. And these are just my personal views. And I would vote that way. And these are the values that I hold. It's not necessarily what I think is best for society, but, and that surprises some people. I would actually say I'm probably further, but the problem I have is when you talk about the left and right stuff, it's a lot of people who say they're conservative aren't conservative. Guys who are smoking meth in fucking Florida and you know what I mean? They're and all that stuff. It's you're not a conservative, man. You're actually not. You just are maybe racist.
You don't know what you're talking
honestly,
about.
And then you get so to me, I don't think most people have an identity. It is just they've just sorted themselves into something because they hate some group of people, right? Oh, I don't like lefties. Oh, I don't like righties. It's I'm team humankind, man. I want us to win.
Mm-hmm.
I want us to not blow ourselves up and colonize other planets and grow lots of trees and fix all the problems.
Yeah.
That's what I want.
Not pollute.
Yeah.
I don't like extremists on any level. Mm-hmm. Any extremist views that I've seen, whether it's political or elsewhere, it's very rarely do I subscribe to anything really close to that, because I'm that person's really far out there. I think to kind of make things work for everyone, like you're talking about, you got to kind of come to the center more of whatever it is that you're talking about, because there's some middle ground there that everyone can relate to.
Well, and that's where you can actually pull, you just saw it in the last election where I think Donald Trump moderated his messaging a lot and pulled a lot of people from the middle.
He did,
right?
Yeah.
And that's where I think the Democrats were because they think they radicalized a lot further, and they were probably pretty surprised because they were oh, it didn't work this time, right?
I want to flip back to real estate just in Ontario for 1 second. Where do you think the next 5, 10, 15, whatever time frame you want to pick, how does development kind of morph or continue to evolve here in Ontario? Are we going to see more single family homes, more densification, more of what type of property? What do you think Toronto looks like? Pick any time frame you want. Just what big trends?
So I think the X factor to me is actually the way that we raise capital in Ontario specifically. So OSC had this temporary crowdfunding thing going on. So one of the things that supercharged U.S. capitalism and U.S. investment in real estate is the Jobs Act, right? So you can crowdfund, so you have all these huge crowdfunding platforms in the U.S. But in Canada, we have the way that we crowdfund for developers is they pre-sell condo units to pre-con investors, and that's broken. And I honestly think it's probably permanently broken. And so we need to rethink the way that we raise capital.
So before we continue on that, why do you think that's permanently broken?
Because a lot of the people who were like signing up and doing this, a lot of them lost a lot of money. And so they actually just like are going to need some time to find it.
Yeah. So they're burned by it, not going to touch that for a little bit.
And then the sentiment around it,
Okay.
the losses are just like so obscene that like it's going to be hard to convince people that this is a good idea for the time being.
Got it. So if a new project comes up to buy on pre-sale, you're going to be like, ooh, there's a hesitant market out there. The market's a little hesitant to go back into that in any force.
Yeah. Or it's like it'll be like reduced to like 10 or 20% of what it was.
Okay.
And that's not going to solve the problem. So like, let's say you can let that continue running on 10 or 20%. What we need to do is like purpose-built rental projects. Like developers should be the ones building purpose-built rental. They should be the ones operating, owning, et cetera, continue and like, or either flipping it to pension funds or whatever. Like there's another version of a capital stack that could properly get housing built, and it would be a way better outcome for everyone, right? Which is that you want large institutions owning real estate. Realistically, you actually do. And in order for that to take place, the equity requirement for these developers would need to shrink. Like right now, if you want to develop a purpose-built rental project, you probably need like 25% equity. Whereas if you do it as a condo, you probably need 5% equity total, like to the project. That, like maybe let's just say that's correct. Right now, like you have realtors out there pumping pre-con projects, guaranteeing returns, blah, 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 all of this stuff on ads, like functionally raising equity, right? Like realistically, that's what they're doing. And we need to fix the system so that that environment gets all of the demand gets translated to, again, real stewards of capital, real developers who are actually going to deliver on their promises and do their returns and all of that. The person who's putting the capital into the project gets an actual better return because they're getting involved way earlier.
Sure.
They're not buying
more risk.
The end unit. And the person who's the execution risk gets is all owned by the developer, and the ownership risk is all owned by the developer. But so what I think would fix the scenario I'm going to mention is a proper crowdfunding environment rather than this like realtor pre-con environment.
And what would that look like?
I think Jobs Act. We need a US style crowdfunding.
I don't even know what that looks like.
So it would basically be like you can go on a website in the US and invest.
Showcase your project.
Yeah, you could invest. Yeah, exactly. And you could and I can go and like pull out the Amex and put $100K into that project.
Got it.
How does that view? Like sometimes do you look at your opinion of that and just think about some other views you have, specifically from if you identify more as a libertarian or some of your views that way, and you're looking at housing as like you think that big corporations should own more and more housing and centralize the ownership of those assets? Because aren't those almost conflicting in some ways? And not that you have to believe everything in one way or the other, but it just seems like it's like for such a major component of everyone's life, which is their shelter, it's like there's no libertarianism there. This is just pure almost socialism, really.
Yeah. Well,
not really. Not really.
They're not state owned, right? Like to me, like a corporation, especially in Canada, like you have hundreds of developers. Like if it was the banking system, I would say, okay, that's a little bit because like they functionally are kind of like a cartel, like, and they, it's oligopolistic, like that's, it's very much like they're almost like state actors, but like developers and like landlords wouldn't be like, they're pretty far away. And to me, like a lot, like the corporation piece is like, you get like a lot of people on social media talking about like evil corporations. Like a corporation is really just like, there's an argument out there that like a corporation is actually like the first version of like a technological singularity, right? So it's like this technology that was built. It's like this thing that's like self-improving, right? A corporation is really just like a group of people, right? It's like like, so all you're doing is saying, I hate groups of human beings. I don't hate you individually, but if you two incorporated and bought a house, now I hate you because you're a corporation. Not thinking about the people behind that are getting paid a salary and getting paid dividends and all of those things, right? So to me,
looking at that, you're looking.
That's how I think about it.
Yeah.
Well, it's a free market version of like, let's call it governance system. But like, again, it goes back to voting with your dollars. If I don't think that, I don't know, like X pension fund should own these buildings, then like I can just stop being a pension contributor to that. Like, and this is the thing that people don't realize. They're like, oh, like evil corporations owning like these buildings. It's like, you don't realize that like the purpose-built rental owner that's like owning all of these things is literally fucking paying you your retirement. Honestly. Like in this, like the people, like what haven't these people got from this?
And critical thought, Daniel, come on, please.
And you think that way because of affordability, I guess is why. Because if you think with proper capital allocation, economies of scale, then they could solve some of the affordability challenges?
Yes and no, like kind of. they can fix the current problem that we have, which is that we're going to have a huge gap in supply in like 27 to 29, right? Like, and that has a lot of
because no new projects are going strong right now.
Yeah, like you have a 75% reduction in pre-construction sales, or 75% below the 10-year average. So right now, let's say we're running at a residential construction environment where we are building the amount of projects that is on par with the 10-year average. Fast forward 3 years when all of those projects are done and all of the trades have left site, and we're running at 75% below that. Like, it's not hard math to figure out that you see a 75% reduction in trades working on slab in the GTA. That's super fucking bad. Super bad. Like, that's like,
you like talk to any construction guys and they'll tell you it's super fucking bad.
Yeah. Anybody, like, the best thing you can have right now is to be on slab in a project that's finishing in 3 or 4 years.
Sure.
If you're done, you're like done. You're going to like out of province, US, Vancouver, and once those union trades are gone, man, like,
how to get that back?
How do you get them back?
Skilled labor. It's going to be a problem. So then, okay. So, I see you're thinking, is this something you think can happen? Is anyone who would need to be attended? How would this change? If this is a provincial change, a federal change, a banking change?
I think it's all of the above. Like, I think, so like
okay. So then it's never going to happen.
I don't know. Honestly, like it's actually interesting. Like I would have said the same thing. Like probably like I might have actually last time I was on the show, but since we've seen GST and provincial like HST removed on purpose-built rentals. Okay, so that's huge. Like that's a big difference. Yes, we've seen like today Vaughan reducing
development
DCs,
charges,
which makes it again like that's going to improve.
So let's assume that propagates around. Yeah, right? Yeah.
CMHC is allegedly working on like changing underwriting on their rents, which because that's like one of the challenges, like affordability, like in the 416 and the 905. To qualify for like an MLI Select loan for one of those large projects and hit the affordability criteria, because GTA rents or incomes are so low relative to rent, it kills your pro forma.
So CMHC is going to adjust that for the GTA?
I've heard that,
okay.
but they also took a step back on that because like basically before in Ontario you could build a project to Ontario Building Code and you would immediately get the full points for energy efficiency.
Yeah, energy efficiency.
Because OBC was already 40% higher than Canadian Building Code. They reduced that to 50 points, so now you have to make up points in other ways. That needs to be retooled a little bit, but gradually the market is improving. Like you saw the feds do something, you saw the province do something. We finally saw a municipality do something, and I think though others will be forced to follow suit. I think it'll be like weeks before like projects start launching in Vaughan as a result of this change.
Really?
Why wouldn't you like want to lock in this commitment that they just put out there?
So you're thinking, so the solution, not the solution, but this solution that you're talking about, if it's going to impact the housing market, it's just a rental solution. There's no ownership there. And the reason I'm asking, let me give you...
Because you're coming from the point that you think people should own their property.
No, I'll explain why. Well, I think it's one way that people have been able to protect themselves against the inflationary policies of the government and what we were talking about earlier.
Sure.
And if we're now not removing that entirely, but we're incentivizing the one solution that prevents that and that removes that as an option for people, so that when and your position is like, well, we think austerity is coming. Whereas like if that austerity doesn't come and they keep this deficit spending and they keep the currency.
Yeah, we have three big corps owning everything.
The currency supply keeps going up. Not even everything, but I mean, there's a larger and growing percentage of the population that can't protect themselves from it. Because I'm not about, like, I don't believe real estate prices just go up.
Right.
I think it's more our currency is being debased, and
totally.
That's why that's all it is.
For sure.
So now everyone that goes into these situations, they're fucked. Right, because they don't even get that. Even if they owned a condo or a townhouse, like whatever it is, a smaller housing unit, they still had some protection against that.
Sure.
Versus they don't get that anymore, and then I guess they have to go into other assets.
But it would be nice if they have both. Like if they do what Daniel's suggesting to change that and did some austerity, then
there's a couple of different thoughts I have on that. Did you want to finish what you're saying?
No, go ahead.
So let's break it into two pieces. So number one is if you buy a unit that's pre-2018 vintage, you're actually, as the owner, you're the victim of inflation, right? Because your pricing power on your product that you're selling, rents, is fixed to inflation. So you can't, like, And if inflation,
as an investor, not as a personal owner though, like if like my own home, for example.
True, yeah.
Okay, but yeah, okay, go ahead.
So like if I buy a multi-family and I can only increase my rents at 2.5%, and inflation's running at 3%, my pricing power is controlled by the government, right? So you have and still the majority is pre-2018 supply. So technically, like investment net would be more exposed to inflation than benefiting from it, let's say, or victimizing the tenant per se. I also look at like a European environment, right? So like I spent a lot of time in Switzerland. I was in the army there, and a lot of my friends there, none of them own their house, like literally none, not a single one. And if they do, it was because they got it from a family member. And like these are like very vintage, like micro urban communities where people like they'll go be a banker in Zurich, and then they'll go and move to when they go suburbanize, they'll go live in the family area, and super well connected area. So you can go to Zurich on a commuter train from like far away, other places in the country. All of that to say that they invest their money in businesses that they believe in. I mean, they're probably one of the most forward-thinking places when it comes to crypto, as an example, right, or Bitcoin. They invest in their own businesses, entrepreneurship, and entrepreneurship is a good example of a business in which you can capitalize on inflation, right? Like if I'm a plumber, or like if I run a plumbing company, and I put all of my money into buying vans and all of these things, like that's also an inflation hedge, because I can go and do my job and have pricing power on a daily basis rather than on a annual basis from my rental building, as an example, right? With my rent increases. And so technically, like that is the proper way. Like when you think about like the American dream, right? Everybody thinks like the American dream of home ownership. It's like, no, the American dream is to build a fucking business and become an IPO that shit and be like a super rich person who created a ton. Honestly though, that's the real one. And so I think that the sooner we detach ourselves from housing being what you're describing, an inflation hedge or an asset, and it just is like this shelter, the faster we go to diversifying our economy towards, I'm going to start this business. I'm going to invest in a mining company because I believe in that. I'm going to invest in battery technology and whatever, like put my money into places that are more meaningful than my own house.
So I agree. And I think that's a problem with Canada as a whole with our economy. So I agree with you wholeheartedly. I'm just
interesting because he's saying, then the corporations own the real estate. This is a positive for entrepreneurship and it's a positive for the economy as a whole. Yeah. Whereas we've always come to the point where corporations are buying these things and doing these things because the general population can't afford to own their own home. So there's just nuance there.
Yeah, I guess I'm just curious, and I don't know the answer to this, and I'm just because Switzerland's had a much more stable currency than we've had, and I'm curious how much that impacts it. And if you take that currency and change the trend of that currency versus other ones and replace it with something like we've seen, does that change the equation a little bit in Switzerland? I know they've removed their peg and they've had more inflation.
Maybe that's the answer. They had to remove recently. Their peg.
Maybe they've had, I don't know. Because I know that's changed. I don't follow it that much. I just know that's changed relatively recently. And I don't know if that would have impacted it or not.
No, it's a good question. It's not something I've ever thought about, but like now that you're saying it, I'm like, I have so many charts to make based on, but honestly though, based on like,
it would be interesting to look at.
Forex and domestic asset values, right? Like,
because because if it does, that's one answer. But if it doesn't, it gets really, your argument gets even stronger. To me, it gets even stronger because I'm like, okay, well, that doesn't impact.
Well, Germany's a good example too, right? Like Germany might be a better comp to Canada, right? Like, and I think it's the third largest economy in the world, right? Or third largest GDP. I don't know, but they're good. They're crushing it. They're top 5, I think, top 10 certainly. But in like Frankfurt's a good example. I think Frankfurt is actually probably the best global comp to like a city like Toronto, other than the fact that it's like not as dense, but like any German city would be a good example. It's not London, right? And Toronto's not New York, but it is a financial core in that continent. And
it's fourth. You're right.
Fourth, yeah. But the home ownership rate in like a Frankfurt, a New York, London, et cetera, is like sub 50%, right? And that's just the direction that we're headed. Like, and that's actually like, everyone thinks that that's like, it's either commie to the right or it's super capitalist supporting corporations to the left. This is the part that I think the left and the right haven't agreed on. They both absolutely hate corporate landlords. Like, honestly, man, they can bond over that. But
is it corporate landlords or landlords in general?
Yeah, both, I guess. But the the part that like I think is that to me is like we have to stop if we want to progress as an economy in Canada. We have to get away from the obsession with housing. Have to.
Mm-hmm. Yes, 100%. And it's like when you look at the charts of the amount of our GDP that's like housing related, we have no investment in this country. It drives me up the wall. And we just instead, and even with a country like ours, with the natural resources that we have available to us, if we invested in those sectors, like you were saying, you're bullish on resources. If we invest in those sectors, and if we had even a fraction of manufacturing, like there's a lot of opportunity in this country. And I think that's where I get even more frustrated, because I agree with you wholeheartedly. And it's just, we shouldn't. You're right. We shouldn't have to look at these little square boxes as these assets that protect us, or that we need to have some of these types of assets because it helps us financially.
So the part that interests me about it is like, you know, when I talk about the austerity thing, like to kind of circle back to the beginning, it's like either they fix this problem in the next, like, honestly, like we're running out of time. Quickly. 6 months, probably 6 months. Like if they don't fix the problem within 6 months and get housing back on track, then the huge gap in the construction pipeline and the unemployment.
It's gonna hit.
Yeah. And so that's probably the only thing in which they're forced to do it reactionarily. And there will be a ton of spending on infrastructure to try and keep these people employed, or we have to eventually diversify, and it'll be the same thing. It'll probably be spending into other sectors. Like, I mean, people who like, you can retool like one of these big concrete companies to be doing mines or doing, you know, whatever. Like, you know, like you're already hearing tons of bids, like billions of dollars worth of bids for hospitals as an example. Maybe we finally get a world-class subway system in the city of Toronto, right? Like that's the only
don't be silly, but sure.
Yeah. Right. But that's the only X factor where like, I think my austerity argument gets thrown out, which is that they fuck it up between now and then, and they can't, and they're spending to fix it retro, which is like probably the most likely outcome, because they really are.
They're pretty much announced that already.
Yeah. Well, they're just reactionary, right? Like I've literally had conversations with policymakers, been like, all you need to do is like give some sort of like improved credit loan or improved credit system that actually exists. Like you already have it. All you need to do is make it available for condos to like free up all of this condo inventory so that a lot of developers don't.
And what would that look like?
Basically just like similar to MLI Select, like that 50 year AMs on condos, so that a lot of these like condo inventory that developers are going to be sitting on can make it into the housing market. Like that's tens of thousands of units.
I got to think they're going to do it.
I think they already have kind of like, they do have a CMHC standard program that can go on condos, but it caps at 50 years and it doesn't get that MLI Select like 40 or whatever. It's like, or 400 bips rate right now. It's like, it's like CMB.
What do you think about the investing landscape? I feel like the investing landscape's changed so much, because now even when these conversations are being had, and even kind of where we went with our conversation, it was more based on like the price of the asset, right? So the price of the property is what everyone's focused on, especially from the investor. Whereas that's kind of like a recent thing. I shouldn't say recent. I mean, that's always existed, but I mean, it's grown a lot more recently. Whereas before, like I've always used to look at investment, the benefit of real estate to me is, maybe the price goes up a little bit over time through some natural, normal inflationary times, but it's more about buying a self-liquidating asset. Yeah. And it's like, no one looks at real estate as that anymore. It's about like, well, buying these condos because the prices are going to go up. It's like, sometimes when I see some of these conversations that are had and I mean, you're online having these conversations. Well, I'm not at all having this conversation online, so I was going to say way more, so I'm not doing it at all. But it's just like, it's that's what I feel is missing in the conversation sometimes. It's like, it's about this not get rich slow. It's about just controlling some assets over this longer period of time and creating some equity that way. And I feel like that's lost in the whole conversation.
Yeah, it's crazy because it's actually been more lost. Like, by this like whole CMHC MLI Select thing. So like you can count on the real estate's like realtor market to like ruin any good thing, right? Like honestly. So all of these pre-con guys are now selling like these like
I want you to continue. Don't lose your train of thought. When I was at Oracle, the sales team always ruined everything. The management would come up with a comp plan for the next year and say, okay, we want to sell this many databases, this much ERP software, whatever it is. We need to get into these territories, these industries, these verticals. They would come up with this magical comp plan. The sales team was magical at looking at the comp plan, seeing where the weaknesses were, where they can make the most money for the least effort, and just attacking that vector hard. And every year it was the same. When every time management figured it out, the compensation plan would be this, the sales guys would always ruin it. And I feel like the real estate market is just like a bigger sales game where the whole country's playing this game. The government and banks come out with these policies, and then you got all these realtors and developers in the back end going, you fucked up over there, and they just attack that weakness.
No,
anyway,
right.
sorry. Go
you're right. So this is it's a good example of it, right? Like, so we had this system before that was condos, pre-con condos. That was how we were funding developer projects, and it was getting housing built. It was doing a good job, and now you've got basically like the same ecosystem of pre-con salespeople taking projects from like Alberta and running them through an MLI select thing and basically marketing them as like 5% down, government backed, blah, blah, blah. Like it's going to, first of all, none of these deals actually end up getting done because the covenant of the borrower is typically garbage. Like your average pre-con buyer, not none, but like a lot. There's a very low stickiness rate on them. But what that has basically done is like, so when you buy an MLI select deal, like a CMHC deal, if you're buying on a 50-year AM and like a 1.1 debt service coverage ratio, which like means 10% cash flow positive. Okay. And a 50-year AM is like basically interest only loan. It's functionally, like you said, it's barely a self-liquidating asset. And the best part about like owning real estate over a 25-year AM as an example is the longer you own it, the faster it liquidates itself, right? If you look at an AM schedule, you pay more principal and less interest over time. Now you've taken that, you've multiplied the AM by 2. You've basically made it like the cash flow is the pitch, but it's not actually, because your cash flow is only 10% too. So now it's a speculative play that rents are going to go up 10% by the time you refi, right? Or like they can't get off of buy low, sell high. And the reason I think that this is, I'm going to get in a lot of shit for saying this one, but realtors, the majority of realtors have zero compelling value proposition. And so the market going up is their compelling value proposition. That's how they close. And so that's why we've ended up with this problem.
Yeah, that's interesting. We're looking at it. I didn't look at it that way, but it makes sense.
Our first rental property, and whenever it was 6 years ago or whatever, the realtor, I remember he shook my hand. One realtor shook my hand and said, "You made a good choice. Real estate always goes up." Just walked away. Didn't know anything about vacancy rates, rental rates, didn't know anything about anything, lease agreements. And he's just like, yeah, you did the right move.
We've had investors walk into this office and say, hey, I just want to buy real estate. Oh, why do you want to buy some? Well, it only goes up. And I'm like, okay, hold on. we got to back up here.
Yeah. Like once a year, I'll tweet out, like, does real estate really go up or does the value of a dollar just go down? Right?
Yeah.
I think I've seen you tweet that out. Yeah.
I think it's 90.
I'm always doing the quiet clap when you do that just behind the screen. Like,
I think it's 90-10, the value of the dollar goes down. I don't know. And I can't even make a base case for the 10 that I'm saying.
Right.
It would be interesting to see if you did put any charts together around Switzerland and the Swiss franc and when it was holding value and the ability of that population to build or invest in productive businesses and not get trapped into the real estate investor mindset. Yeah, well, because I feel like a lot of that, like if that actually, that's just interesting to me when you said that, because in Switzerland, if they were able to carry that forward, and maybe it's been too short a time because I don't know how long it's been, 15 years or something like that. I was trying to look up the exact.
Was it even 15? I don't know why 2018 stands out, but I'm sure I'm wrong.
Okay, so I don't have the exact number date here, but like if they were able to do that, maybe it's because the currency was holding its value and they didn't feel cornered into becoming real estate investors.
Makes sense, yeah.
And maybe I'm wrong on that. It would just be interesting. Basically, what I'm trying to do is give you homework to see if you could figure that out.
Yeah, well, I'm going to do these like 4X house prices.
Because I'm trying to think, like, what would it take for a Canadian to say, hey, I'm not going to buy real estate because of this? And the first thing that comes to mind is a currency that doesn't lose value and a tax code that would encourage me to go down and build a business. So if I'm taking a risk with my capital and something happens that I'm not penalized, I get a benefit from taking that risk, something that would give me some incentive to go down that path.
Well, it's interesting because like you technically, like your tax incentive is actually better to build a business than to buy real estate in Canada. Like active income from a corp is cheap. Like everybody's like, oh, you buy a real estate in a corp. It's like, well, that's like the holdco myth. Like if you're collecting passive income from a real estate asset, you're paying passive tax on passive income, not.
But an active business, what is on the first 500,000 of net income in Ontario right now?
I think it's 11 and a half. Is it 11 and a half?
12.25, 11 and a half. It's something like that. It's right around that.
Yeah, it's low.
On the first 500,000 of net.
Yeah.
Yeah, so people can like blame tax code, but it's not. Like
when you say that to to people we know in the States, they're like, "What? What are you talking?"
Okay, so then it's not tax code. You're right. Good point.
Or they have a education problem, and most people don't know that, which could be the case. Basically,
agreed. So then, let's assume the tax code then isn't the problem. that people will eventually find out about that. So then what is it?
It could be leverage, right? Like what you're seeing some solutions for, like with BDC, like the Business Development Bank is like providing better leverage systems for business acquisition and stuff. But like that could be it, right? Like you can go, what other asset can you go? Government insured levered long, 20x.
So better lending on businesses as some for using the balance sheet of a business or the income statement of a business as a better form of collateral.
That might improve things. Yeah. Like to get a comparable amount. Yeah. But I mean, like the other piece is that like high prices will basically solve this. Like in Switzerland, like you can't buy a house. Like the average person can't buy a house. And like we're at that affordability.
So maybe it naturally corrects.
That's what's going to happen, right? Like, and this is the part that's funny about the realtors cheering on prices going up. It's like, okay, cool. Keep cheering. Exactly. It's like, cool. Go look at a market in which house prices did go up forever and say, oh, well, how big is there? How many realtors are there? Do they have the biggest real estate board in the world? 70,000 realtors.
Is Toronto the biggest real estate?
Yeah, biggest real estate board. Most realtors per capita in the world. It's like keep cheering because you're fast tracking your career as a rental agent.
Mm-hmm. So it's a moment in time, perhaps.
Look in New York, any realtor in New York is a leasing agent, right? In Manhattan.
Mm-hmm. Yeah, there's obviously a ton of them to do really well on some high-end stuff, but you're right. It's not the biggest real estate board in the world. And I'm sure their market on just gross revenue or gross sales going through those boards is massive. Interesting. Okay, so I just want to do I'm going to take in a couple different directions just because you tweeted out some stuff. Why did you tweet out recently about Target? You just put that one. I think it's your most recent one. Just revenues are down, even they're cutting prices. Were you trying to say something more about the U.S. economy there? Or was it
just kind of fascinating to me. Like, you're seeing, I don't know.
Target cut prices, like, I guess, across the board on everything, and their latest revenues came out. It was just deplorable, like brutal.
Well, I think that's why, right? Like, so, they probably would have known their revenue shit before. And then, like, typically when you see, like, I feel like this is right now too. You go to like Home Depot and everything's on sale. Like that's deflationary. People don't think about it that way. But like, and then you're like, oh, well, I'm not going to buy it because the sale ends in 2 months. And that's how deflation begets deflation, right? Like, and so I think we're clearly in a recession now that they're finally going to stop trying to prop it up with government hiring and population growth. We're actually like going to have a really bad recession in Canada for the next year. And you can see it all around you.
And how is it? Agreed. You can see it all around. And I would normally cheer on lower prices for stuff, except we have an inflationary GDP, a system that requires inflation for it to function. So what do you think the policy response from the government's going to be over the next 6 months, 12 months, 18 months?
Well, the government can't really do anything about it other than spend money, which like I think that they've just realized they can't actually do that anymore because they're going to lose an election. And they're now like, this is where you see this thing called the political business cycle, where like basically there's two theories of political business cycle, but basically you see these like cyclical events happen where the government is doing something in the economy to try and win an election. And then there's the other one where you just basically see shifts back and forth from rightist and leftist policies. So from like rightist policies that cut inflation and leftist policies that create inflation by hiring and spending.
Okay. So what does the Bank of Canada do then?
I think it's just going to depend on CPI readings. Like if we had this 2% now, I mean, they need better data, to be honest with you. I think they're big.
We're brutal on data.
Well, we're just behind.
I can get better US data than I can Canadian data.
Yeah, I know. It's interesting because like this is something that's like really near and dear to my heart. Like I mentioned I just built I was on the team that built the data science platform for the Toronto Real Estate Board. And like again, we observed rents falling. Rent CPI is still like 6% in Canada as an example, but yet actual real rents are falling 6%. So there's a 12% gap.
Wow.
In what the Bank of Canada is using as their guiding, right? And so
holy
like
shit.
2 months ago, right as Trudeau started toying with this thing with the population decrease, I was like, population's already falling. Population growth is already falling. You could tell just by looking at rents because the Bank of Canada mapped this rent inflation right beside population growth, and they were like like perfectly correlated. And so you would assume if rents are falling, then population growth is also falling.
And rents specifically in the Toronto, we're not seeing rents fall too much from just our data, but it's like we have a smaller data set of just people we work with, which is fairly large, but it's not huge. Like it's not a huge data set, but you're seeing that on a whole or in a certain sector.
Yeah, we can pull it up after. I'll show you.
Yeah. Interesting. Okay.
It's
different
like
segment of the market, different segment of the market though.
Was that 905 rents or like?
Yeah, we're just a lot of low rise.
Yeah, a lot of single family home.
But it's like in duplexes, triplexes, that type of stuff. Where we haven't seen the lineups of people waiting for the properties anymore. So we've seen demand drop 100%. Rents have relatively stayed pretty stable.
Yeah, quality of tenant has decreased. For sure, we've seen some of that. Yes. Yeah.
Yeah, and then you go back to the inflation argument, and that's like a real rent decline, right? If they're at zero.
Okay, so you think the number is going to come down. We're headed for this recessionary period where the Bank of Canada then is going to do something.
Well, I think they're already doing something by being ahead of the Fed, right? Like they're going to, I think even with the 2% CPI, they're going to cut, again, I don't know if they'll go 50, but they might go 25 for Christmas.
In December.
And then what? Now we're 100 bips ahead of the US. So CAD's toast. And
I know, it already feels like it's toast. I see some charges come through on my credit card and I'm just like, why?
This is where you get trapped in a country's currency where you can't even go to the country next door because you can't afford to go.
Well, you look next door. I was just in Florida last week or a couple of weeks ago for a few days. And then I'm just doing everything I was buying. I was just doing conversion in my head, adding 40%. And I'm just like,
40 at the minimum. It could be 41, 42, 43.
But I was just like, I feel like I'm working for like a second class currency. Like I know there was always a discrepancy, but now at this level, I'm
should have been born in Buffalo, close by.
Canadian pesos.
US dollars, man.
Yeah.
You could be right by the Buffalo Bills Stadium.
But it just seems crazy. Like you just start getting this feeling that you're like, oh my God. So like I'm working and my effort just because I'm in Canada is just diminished that much on a global scale.
Yeah. This is why it matters who you vote for.
So this is part of the turbulence ahead that, we just kind of mentioned the fourth turning, that whole thing. Next few years, this evolves and it's going to be a little bit choppy.
Well, it's interesting. Like you look at just in Canada, like voting patterns among age cohorts, it's like, everyone's like, oh, like your generation voted for Trudeau. It's like, well, go look at the data because they actually didn't. Like
they didn't,
or like they did last time, but they're not.
Generation.
They did, but they're not going to. Right?
Oh,
it's like,
I feel like there has been a shift.
There's a big shift in the U.S. and so that age group.
Exactly, and that's a lasting change, right? Like Morgan Housel's like Psychology of Money, great book. He talks about this thing like how young people like our generation never really we didn't care about inflation because we never experienced it before in our whole life, right? And it's the same as like what's going to fix people's like getting rid of people's obsession with housing. It's like, okay, well, why don't all boomers love real estate so much? Because they went through the 90s.
I've seen it. Yeah.
They saw what happened in the 90s. Okay, cool. So we're going through that moment right now. We're going through it with inflation. We're going through it with politics. We're going through it with housing. And now it's a different world from that moment on. That's the fourth turning.
Maybe that's why we're able to see some investors now, like they're picking up some decent deals because they're more experienced investors and they're able to look at the numbers. They're like, hey, these numbers actually on a long-term horizon, like back to kind of the fundamentals of buying these properties. They're like,
makes sense.
These numbers make sense. Like, I'm going to buy this thing and hold it for a period of time and I'll do the work and I'll manage it and I'll, but that's the idea behind it. Because
if there's another 1 or 2 interest rate cuts, a whole bunch of them are going to make sense.
Well, even I've talked to a couple people even just in the last 60 days. They're like, yeah, I had a couple properties that like I was looking at that I was unsure about, and then the rates dropped. I'm like, these things are starting to look really good all of a sudden. So they're starting to get in.
Okay.
So it's just the perceptions changed a bit. I'm just curious though on this front if and I don't think this is going to happen, but Trudeau leaves in the spring.
I knew you were when I saw you smile, I knew it was going to.
Well, because they hold off the election, right? They hold off the election because to the fall, even though like I want it yesterday.
To the third week of October or whatever it is.
Well, it can't be the second week.
No,
it's a big problem. It's got to be the third week. So they hold off in the spring. I think his ego's too big to do this, but so I think he'll stay on if that happens. But in the spring, he realizes that like whatever 99.9% of the country wants him out. So he steps down. Carney comes in. And everyone's like, oh, well, hold on. Who's this new guy? This new guy is talking pretty good. Maybe we go in that direction.
Like, well, I guess the question is, is that actually like logistically possible? Like, doesn't it just go to Freeland because she's a deputy? Because
I don't know.
No, because they can have a leadership convention. I don't know how long they have to have it, but I think would give them enough time to have a leadership convention. So it does to
run the next election.
Yes.
Oh, yeah. I don't.
Oh my God, her running the country scares me too. Holy crap.
Yeah, well, and they're like both of their polling is both like.
Yeah, she wouldn't be able to. No. They wouldn't run her in the elelement.
I mean,
they would have to run Carney.
I think Carney has he has the best chance out of anybody associated with that party of winning the election, but I don't think anything can save that party right now. Yeah.
Good. I'm glad you said that.
Let me throw just another kind of curveball thing. the U.S. stock market MicroStrategy.
Yeah.
Well, Michael Saylor. I don't know how much you're following it, how closely you're following it.
So it's actually funny because I'm actually doing like a MSc in econ right now, like a master's of science. Yeah.
Cool.
And so I've been studying a lot of like recessions. Like that's what I'm doing a lot of my work on. And I was reading about the .com bubble. So I've done a lot of research, but just comparing metrics today and then, I think it's a mess, man. I think it's like, at this point, it's just roulette. It's like, which of these companies, I think isn't NVIDIA's earnings today?
I don't know.
Tomorrow?
There's tomorrow, I think.
Yeah. Cause it could be them. Like, you know, it could, like, I don't know. I mean,
so one of them comes out with a big miss.
Yeah, I think, I don't know, like, but like, you know, you would have thought it would have been NVIDIA, like hit their .com EPS like last year when that was that huge thing. It was like, they were like 124 EPS or something, or PE ratio. Same. That was like, I think, MSTR is like the same thing. Something's going to do it. I don't know. Right. Like, and I think that, you know, I don't know, like when you politicize it, it's like, Donald Trump's going to preside over a recession. And I think that the left is incentivized to do that, or like the Democrats. And I think that they have more control over the economy than the right, probably.
And how's that?
I just think like political influence, like exposure, like you can see, you know, like the Nancy Pelosi tracker.
Got it.
Like,
Yeah.
They know what's going on. Right. Like, and so I think that they're capable of like letting that take place. Let's call it. I think it's probably more poetic for them if it's associated with like the bull case of like Trump saying that strategic Bitcoin reserve and like all of this stuff. Like, so, I mean, what's going to be the catalyst is the question. I know the actual catalyst is just Japan. Like it's pretty simple, right? And whenever that trade flips, it's over, I think, realistically. Right?
See, it seems that way because anytime it's come close, things get really shaky.
Yeah.
Really
well, there's been a couple and then they just pump.
Exactly. That's what I mean. So it's like, it seems like if they ever let that go, but how long can they, my opinion is they can keep kicking the can, and this is different for me. I've just basically, I'm like, they can kick down the can down the road for a lot longer than I ever thought. That's like the one thing that's like, because I've never really been through a real Canadian recession. Like I've studied the hell out of it, all of them, but like I never actually have been through it. And so the part that like really is that's fascinated me is how long it takes. Like it
takes a while.
So long.
In 1990, when it hit hard, like I was 17 years old, and that recession, that's why I laugh at everyone who said we've had a recession here in Canada since then. I'm like, no, we have not. Yeah. In 1990, I remember everybody working, construction everywhere. I was driving our father's pickup truck, deliveries, multiple job sites. You couldn't find anything. Workers, you couldn't find material. I was going Yorkdale to pick up material, drive it into Georgetown. It was insane.
Yeah, we were rocking.
And then the next summer, everybody was in our backyard. All my friends.
I was too young to realize that, but like that's why. But I remember
nobody had a job.
We were playing cards in the backyard every afternoon.
We were playing cards in my backyard. Nobody had a job. I only had my bank teller job. It was like Friday night and Saturdays because the banks, right? So I had that part-time hours. Nobody was working at when I say nobody. Everybody was over. You couldn't beg to find a job. The department stores that were open were empty. Like if you went into Eaton's back then, I know Eaton's is closed, but it was a big department store back then. It was crickets inside the department store. You would do a shift at Eaton's when I had these few hours at Eaton's, and in the menswear department, there would be like nobody in the menswear department for hours. Not a person walking through the mall.
Yeah. And I think the 90s is like a really good comparable setup to what we're going through right now. Like
that was really ungodly. Like that was 6 years of a real estate grind down in prices. Yeah. 6 years. And people sell. It got to the point where people were selling. So there was real estate activity. There was brokerage activity. After about a year and a half, there was actually brokerage activity. Yeah. But prices went down because people were like, it's going to get worse. I just need to offload. I got to stop the bleeding. So there was actually brokerage activity, but the prices just kind of went down and down and down.
Yeah, not super down though. Like really, like you had the big blow off in the 90s, and then it kind of was like sideways.
Almost
you're right.
Like down a little bit. Yeah,
on a percentage basis, I don't know what it was, but
so it was kind of like 20% drop, and then like basically like a 1 or 2%.
Unless you did what our father did, who bought pre-construction on assignment outside the trailer on a gravel parking lot. He bought this house for $750,000 that went to $450 in 4 months. TD raised its interest rate 2.9% in 30 days.
Crazy.
The house went from $750 to $450. So somebody bought it in the trailer, came out of the trailer. Our father bought the paper off the person. I'm pretty sure that's when they changed the laws.
That is when they introduced like the HST on flipping paper.
That almost wiped our family out. Like that was absolutely devastating.
Yeah. Well, like that was like everybody, like again, like go back to boomers. Like you ask a lot of them who are living in like these suburban 905 homes that they bought brand new, but the they bought the paper, like it had changed hands like 9 times before then, right? Like realistically, it was the exact same thing as what we're seeing today with pre-cons. Exact same.
And it's why it always scared us away from pre-cons. We were always just like, hey, we don't do pre-cons.
We've seen this before.
Yeah, we've seen this
and it goes back to the micro strategy thing. It's like, we've seen this before too. Like if only there was a historical comp for like tech valuations getting completely blown out.
The difference with MicroStrategy that I'm fascinated with is they're buying what might be considered the hardest asset we've ever seen, putting it on their balance sheet.
Yeah.
So other companies, if they're just being valued on the income and the future income and a multiple on that, I've never seen a situation like in the tech bubble, you didn't have tech companies that had hard assets on the books.
Right.
So unless you're discounting, unless you're saying, hey, Bitcoin's not a hard asset, it's a different argument if that's what you're thinking. But MicroStrategy has this asset on their balance sheet.
Right.
So for them specifically, I'm not sure where this goes.
Me either, honestly. I don't think there is a historical precedent.
No, there's not.
I mean, you can trade below asset value. Like,
sure. Yeah, that's fair.
BlackBerry did it for a period in like, I don't know, 2010, 11, something like that.
Yeah, and if all the hype around Bitcoin subsides at sometime soon, then it gets less sexy as a trade too. It can go below asset value for sure.
Or just marks down to actual asset value. Like, aren't they trading at triple? Right?
Yeah.
I don't know what it is. I don't know what hour it is.
Every time I look, it goes up. Yeah.
But I guess that's just the market, like giving them more capital to buy more Bitcoin, really, right?
That's exactly what
I think the way he's talking about himself now is like an oil company would take oil out of the ground and then offer multiple different refined products to the market. He's looking at that as Bitcoin. He's taking Bitcoin and then offering different financial products and instruments to the market. So if you're a pension fund that you can't buy an equity or something, but you can buy some sort of debt instrument, he's offering debt.
Yeah.
He has on the balance sheet, he has Bitcoin, and now all of a sudden pension funds can buy into Bitcoin via a debt vehicle that maybe didn't exist anywhere except MicroStrategy offering it. So I think it is like a financial engineering exercise that we've never seen that maybe blows up the entire stock market.
Yeah, financial engineering always ends well.
The catalyst to the market coming down is him selling all his shares, saying, "Okay, guys, I retired. Thanks, everyone."
I'm out. And then just the Bitcoin price move in general. What's your thoughts on?
I mean, I don't know. Like it seems like we're like in a bit of a mania, to be honest. But like like we could be in the third inning of mania.
Yeah. I remember my Oracle shares when I was getting them, it was like $10 a share, and then it went to 15, then it went to 20, and then 25, and then 40, and then 60, and then 80, and then 85. And I was just telling Daniel before, I think I went home to Carol. I'm like, Carol, I know this is going to sound weird, but I don't know, maybe we're going to be rich. Fool, like that is like the most ridiculous thing to say out loud. Like that is and I think I even said it a bit sheepishly at the time. Like, and then it must have been, I swear to God, 3 weeks later, it just went from 80 to 70, and I'm like, oh, I'll probably stop there. And then it went to 60, 40, 20, and it went down. I think it's around $14. I just stopped looking. I think it settled in around under $14. I did sell some right at the peak, the absolute peak.
What, 2 shares?
I bought a ring. I bought her, maybe it was, I forget, but I bought Carol a ring. It was the only thing I got out of that tech bubble was that ring. Yeah, I got it. It was a good ring. It was a good ring.
Better was for her than you.
Oh my God. But watching it come down, I guess it was like easy come, easy go, so you just kind of like, and I didn't have the financial sophistication to even know what to do. Like I literally just watched it come all the way down.
Yeah. And that one was that was a true bubble where it had very minimal impact on the economy realistically. Like there was a mild recession in 2001, but like mostly just those companies.
Yeah, Oracle did lay off people. Like I saw people literally walk out with boxes in their hands to the parking lot. Like my desk was looking out to the parking lot and stuff. But you're right, it was kind of constrained to the tech industry.
Yeah,
and I don't know how big that was in Canada.
Certainly wasn't. Well, I mean, even in the U.S., it certainly wasn't the size and scale that it is today.
Yeah, agreed.
So I think like the interesting part about the .com bubble though, like was that, there's a sense that it was different because there was the information superhighway and, it was a paradigm shift in the economy.
You don't understand.
Yeah. It's different now. Right. And people like, you can hear the same thing around AI. Right. But like the thing that is really,
crypto.
Yeah. Right. Yeah. Like people think that there are these distinct lines being drawn in the economy. Like for some reason it's going to change everything. This time it's different. And I think that, there's this really interesting podcast with the guy from Anthropic and Lex Fridman. I don't know if you guys have listened.
I heard chunks of it. Yes.
Brilliant. Yeah. But he's talking about how like these innovations never really materialize. Like they materialize in a really like disappointing improvement in productivity, which is what actually matters. right, is like
at first.
It's like the
early stages
in their entirety, really.
I
it's
thought
not
it was
like the tech boom resulted in everybody becoming an Amazon Prime member.
Well,
like that was like the result of the tech boom.
Yeah, like realistically, or being at like, now we're like on email and like all of us are distracted, or like it's like Zoom made us like we can now work from home. It's like, oh, that was net productive. Like now I can do my laundry while I'm like pretending that I'm at work.
Isolated, losing their mind.
Right. So I mean, I think it's still too early to tell whether or not these things will actually have like material positive impacts on the world, right? Like you can definitely see it but in
manufacturing, like you can see it like removing some jobs in some industries. And I don't know how many and what quantity and what type of income jobs are replaced by some of those. But when you see some of the robotics and some of the stuff that's coming out, it does seem like this is going to have some material effect. And I don't know how it works. I guess like just hearing you speak earlier, I was just thinking to myself, like the Institute of International Finance, I think puts out that like global GDP to global economic output is like 3.5 to 1. So if I just made it simple, 3 to 1, like I always think about this. And then, so if 3 to 1 is the debt in the world, $3 of debt to every dollar of GDP, if that debt comes with interest, and if we were to use like a 4% interest rate on that, that means the 3 is growing 12% right there, right? It's going 3.12, not 12%. It's going to 3.12 after 1 year. If the economy is to just keep pace and we need an inflationary economy to kind of make these debt payments, we need the 1 on this 3-1 ratio grow. We need it to add 0.12 to itself to just not let the gap widen. Right. So then I'm thinking, holy shit, like whenever you just look at the basic high level math, I'm like, we need 12% inflation in the economy just to have this gap not increase. Right. And then my mind goes to layering in automation and AI. And I'm like, even if it doesn't change the world, if it brings down GDP because there's less high income jobs and it makes things cheaper, deflationary, like you were saying in the environment, like Home Depot and all this stuff, isn't that even more pressure on this? And then instead of 12% inflation, just to keep this kind of in pace, like, do we just mathematically need, by way of the system, like all the arguing we want, whatever, we just need 12% inflation as a minimum so the whole system doesn't blow up?
I mean, when you put it that way, like it sounds, and like,
shit, I was hoping Daniel was going to say something else. I thought he was going to say something. No, I don't.
Well, no, I think it makes sense. Like realistically, that's like kind of the rate at which you're like the buying power is incinerated at. The only X factor I would say is like, there is a chance that we are actually entering a period in which we do throw that out. And again, like it's not
in what
tomorrow.
way?
Well, because we're not actually like one of the things that the total addressable market of planet Earth is growing, right? And then the buying power of the total addressable market is growing. So like population is growing, plus the amount of money that population has is growing.
So you think we could grow the economy?
I don't think we can anymore because the population is likely not going to grow at the rate that it was. Like, so you don't have like India is probably the best, like, and maybe, and I guess Africa, like the whole African continent is like the only place on earth that's growing at above the replacement rate, birth rate right now. India fell below the replacement rate. China's population is going to fall from like 1.6 to 900 million. And like, so that's like a huge contraction. So like add the population piece.
Yeah, exactly.
I think that we are like, if like this time it's different, it's this time it's different from like a very like, I don't know, like we're in like a contraction of the whole thing, right?
I think you're right. I think you're right. Yeah.
Like where, like, yeah, okay, you can get India pulls.
Because if you bring the 3 down.
So if you bring the debt down.
But like, how does the debt disappear?
That's what I don't know. Yeah. That's what I can't figure out.
On that map.
Bernie Sanders just gives everybody a student loan holiday.
Totally. Just like, forget it. You owe debt, it's gone.
I don't know. I mean, like realistically, I think maybe that's like at a certain point, like what happened when sovereigns were, or when bondholders were holding like Weimar.
Well, they revalued against something else.
But like, is that what happened? Like with
the Weimar.
I think Weimar is like a decent example, but like, I don't know. I can't think of another example. Like Turkey, like if we were holding bonds for Turkey, like what did you do? You just mark them down, I guess, because they're basically.
I just know when Yugoslavia had the Yugoslavian dinar, and our family in Croatia had dinars. The poor. So that hyperinflated in the 90s. The poor unaffected.
Right.
You're living hand to mouth.
Yeah.
And hyperinflation doesn't matter.
Right.
You have nothing.
Yeah.
Doesn't matter. Doesn't affect you. The rich, not affected.
Right.
If your friend can give you a hotel chain or give you a couple buildings or give you
because they actually own
because they had assets or they had through government, whether it was a corrupt government, corruption. Fair or unfair, you had access to the assets of a country. You're not really affected through hyperinflation.
You're saving
the middle, like, you know, some of our family members who had some very meager savings that would be considered middle class at that time,
gets
wiped out. So like our aunt literally went to the bank. They had a plexiglass box. They didn't count the currency. They said, just stuff the bills that you have in there. When it's full, we'll just give you this much denomination of the new currency. Right. They didn't even bother counting it.
Crazy.
And they closed the little lid. When it's full, that was it. You got this.
So it's like, again, if you inflate away the middle class, then it ends in revolution, right? Like that's probably the one thing. That's probably the one thing the communists got.
You know
right.
what happened in that area of the world, right? All out war.
And Weimar was the same thing. Like it was that's how Hitler got in, right? Like realistically. So like, I mean, these things don't ever.
And that's part of me where I'm like, where are we headed? Like, you know, when we talk about the fourth turning,
I don't know, man. That's like a path I try and avoid going down. Honestly, like all the paths that I have created, all my range of potential outcomes ends with like. You know, I'm prepared for those outcomes. I played a lot of Fallout 3, but like, I don't know.
Yeah, you were in the Swiss Army. I feel like you're fully prepared.
Yeah, I've been.
Yeah, there's layers to Daniel that none of us know about for sure.
Yeah, but that's like the one. It's just like I don't know, man. Like it is hard to imagine.
And I'm not saying we head there. I just mean I don't like the
it's not
historical
hard to
comparisons.
Imagine.
Exactly.
It's not. It's really not hard to imagine. Like the people who have control of the financial system, who can be like the wealthy that you mentioned that will benefit from it, are like. Can engineer that to take place, and like then you basically take everybody below them and push them all into one class. Like this is again like your proletariat and your bourgeoisie. If you go back to Marx, right? Like they've observed the existence of this pretty well, and then it leads to a revolution. Does it actually lead to communism? No, because that can't actually functionally take place. But that's like the end. There isn't another end to that, really. I don't think, right? Okay,
so we'll come and wrap with this over the next, for your life right now. What asset base do you recommend to people, or for you yourself? What are you trying to build for yourself?
So to me, like right now, I think the best thing a young person can do is like invest in their. I don't want to be cheesy and say like themselves, but like invest in a business. Like create. If you're a young person in like skilled trades, like get off the system. Get off the union job, get off the pension, get off all that stuff, because they're not going to be there for you, especially if what we just talked about happens. You think they're going to be like giving you guns to protect yourself? Probably not. Not that like that's actually where it's going to go, but like that's the best hedge you can get against the all of it.
So be useful in the economy.
Well, or in the market. Build a business. Like that's the best investment that you can make, right? Because you have control over it. It's very comparable to real estate. Real estate you could do as like build, invest in rental property. That's a business that you could do. But like I think that some combination of like hard assets and building a business that you have control over is probably the best thing that somebody can do. Especially, it is necessary for the future of Canada to diversify our economy and run like a real economy. And if you're hopeful for that outcome, and if you're voting for that outcome, and if we're pushing to hold our politicians accountable for that outcome, then you have to make your decisions as if that outcome is likely. And the way to do that is to build a business, right? Like if we're going to go through this revolution where Canada starts finally maximizing our resources, all of these things, there's going to be so much opportunity, man. Like I'm not giving up on Canada, right? Like at all. I'm probably like,
we have so much potential.
Honestly, like, and could be the greatest country on earth. And if you think about what happened to the U.S. when they went through that period, right, of growth, when it was just like ripping and everyone was just fired up and building businesses, and like, that's what we could go through here. And that's what we need to be hopeful for. And the best exposure that you can get to that is like yourself, your own hard work, your own business, all of those things. You can't trust somebody else with it. You can't trust the pension system. You can't trust your union. You can't trust your employer, et cetera. I don't think. Not as much as you can trust yourself to get up and go.
No, Tom gives me shit when I'm optimistic on Canada still. I know you want to be, and I've been like, it's not all that bad. Yeah, that's very good.
Yeah, because he's doubling down on himself or the person to increase their skills and offer value to the marketplace. I'm bullish on that too. Here. Yeah.
I'm just saying Canada's it's not over yet. But
I honestly think that what's happening right now is like this necessary burning to the ground. Maybe that will like it's like a phoenix, man. You just rise from the ashes. You got it. Like it was built very poorly, right? What do you do with a shitty house? You demolish it. You rebuild it properly. That's what we're gonna do.
There is potential, but I also feel that if that. So I thought your answer was amazing.
Thank you.
Right, I agree, and I just think if it doesn't happen relatively soon, then we're heading down the wrong direction very clearly. And if we don't correct course soon, we're too far down the path. Mm-hmm. And I don't know what that number is. Like, I'm not talking like 3 months from now. Do you know what I mean? But I'm not talking 20 years from now either.
Mm-hmm. But just to be fair, Nick, every time I talk about Canada's on a dangerous path, I am kind of thinking it in similar ways, like burn it to the ground to rebuild it and let the new growth come through. So that's kind of where I'm thinking. I'm like, I always think there's potential. I believe in humankind. I believe in the spirit of the individual person for them to add value to their community, to the person next to them. I think there's tons of potential for all of us. And in this country, if you put a bunch of productive people with this many resources around us and give us just a little bit of governmental structure that we need, I think this place will flourish.
Right. And we need hope.
I'm on board.
100%,
yeah.
We need to feel like, that's it.
Oh, sorry. When I was saying before Tom spoke, I thought we were going to say something else.
Daniel, so what are you, what's going on? What's the latest with you? What's going on with the latest with everything you have on your educational courses and the real estate stuff, on the meetups across Canada? What's the latest?
Yeah, I mean, like, we're honestly just really trying to, similar to what you guys are doing, like just build a big community of investors and people who want to do stuff in real estate. So we have like meetups, 26 cities across Canada on a monthly basis. Yeah, with like local hosts.
That's wild. Have you tried to count how many people are meeting up?
Probably like 1,000 on a given night. Yeah, so like that's coast to coast. We have 4,500 people in the meetups, like in the meetup.com page. We have an online community and course as well, where we do like some coaching and just teach people like honestly fundamentals, like the stuff that I talk about on the show. Like I think most people, when they're paying for like coaching or community, it's really just accountability, right? Like I think you can learn 80% of this stuff on Google or like ChatGPT now. Like if you want to know all the knowledge, it's not that hard to find, right? I think most people are paying to like get on these regular calls, keep themselves accountable, bring deals, look at stuff, et cetera. So we're doing that. And then I just got a role at this company called Realist.ca, which is like an AI-powered real estate brokerage. And I'm going to be doing some work with them in that space, which I'm really excited about.
Yeah, cool. You got to tell Nick, we got to get these guys together doing something I forget.
Why don't we just do like an event where we do like a live podcast recording, all of us?
Yeah.
That'd be cool.
Yeah, we should. We bring them in. We can do something like that somewhere for sure. We're just huge fans of you, man. And we really try to live in our own bubble. I think our family had been burned on real estate pretty bad. And then when we got into investing, you don't know our whole story, but we spent money with some people that maybe didn't leave the best taste in our mouth. So we just decided we were going to put our heads down and live in our own real estate bubble.
Yeah.
And when we do pop up and look around, in our humble opinion, you and Nick are just doing some great stuff. Like we're big fans, man. So keep doing what you're doing. The meetup stuff, if people want to find out where the latest meetup is, what's the website? And for the course?
Yeah, it's on meetup.com. But if you go to Realist.ca, just like realism. Realist.ca, you can find like the meetups and the course. Yeah.
And then on Twitter, your Twitter handle?
Daniel_Foch. Just if you Google me, usually like Google will give you the platform that you're most likely to click on. My last name's like, I'm fortunate. Well, you guys have it. Unique last name.
Just don't ask me that. Can you just Google
but yours is 4 letters. Ours is a lot more.
Yeah. How do I spell that?
You should follow this guy on all the platforms, man. Great information. Daniel, thank you so much.
Thank you.
Really
guys.
appreciate this. Thank you.